What's going on, everybody? TG here, back with another video. Guys, before I start this video, two things really quickly. First off, we have a Discord channel in the link in the description below. If you guys want to join and find out how we do these trades live and just to talk about the market and stocks and different upcoming, things in the market, feel free to jump in the Discord. It's free. Jump on in there and, come meet some of us traders. We got about 200 members in there, constantly growing, and a lot of good information, including challenges as well, where you guys can win some cool cash prizes. Number two, subscribing. Guys, only about 25% of the people who watch these videos are actually subscribed, and it would mean a lot if you just hit that subscribe button. It just shows me that, people are actually, interested in these videos and getting something out of it, and it just means a lot to me. And then, like I said, you're also entered to win giveaways as well, being subscribed like we did, last week when we gave away a share of Tesla. So let's just jump right into this video. Guys, this video is all about how I jump into trades, why I jump into trades, and what I use to jump into trades. So as you can see, I'm more of a passive investor, but I also do active options trading. So that essentially means is I have my long shares, my Amazon shares that I'm going to be holding long term for, a while anyways, until I make probably at least 5 figures on that. And the other thing is I'm doing options weekly. Now in this case, I've done a couple options. I've sold a put on Pfizer that I've made some good money on. Pfizer's a little weird right now because Pfizer had a weird merger with VXRTS or VRTX. And so even though it's a 36.5 put and Pfizer is sitting at 30, it doesn't even tell me because it's Pfizer 1, but Pfizer's sitting probably at exactly 36. I'm still up 74%. So, we'll get $39 in total out of this trade, which is pretty good. Not bad for 1 week. It's like 4 hours of work right there. So I can't complain. But that was one of them. We also sold an Alibaba put for next week, and we're currently up $360 on that as of right now, which is really awesome because Alibaba, the funniest thing about it, which is why I absolutely love selling puts, Alibaba is lower now than when I sold the put, but we let Theta do its work. And every day, Theta is making that option worth less and less, which means we're making more and more and more because we got it for a higher premium. So Alibaba is literally 57, 75 cents under what I initially sold it at. So you'd think, oh, he bought a put, he should be up. Not exactly, because Theta works, and the way Theta works is if we look at this option right here, this is a spread, I think. Yeah, this is a spread, my bad. Let me go to the other one. Sorry about that. I did 2 sets of Alibaba options. Here it is, the 460 one. So if we go here, we can look at the Greeks for an option. And right here, this is Theta. Every single day, trading day, this option will lose 35 cents in value. So if Alibaba stays exactly where it is, every single day, we will get 35 bucks more from this option, which is pretty cool to think about it. You're essentially betting that the stock's either going to stay the same, go down a little bit, or go up. In any of those scenarios, you win. The only way you lose is if the stock drastically goes down. And if we look at this put for the past week, it started up, I don't even know where I wrote it. I wrote it for 820. So I think it was the end of the day, November 17th or something like that. I don't even know. But I got 820 for it. I think it was right here. Right towards the end of the day on the 16th. I got $8.20 per. So that's 820 US dollars. And ever since then, you guys can see it's been a slow bleed, letting Theta do its trick. It really crashed badly. But even when the worst that it crashed, the guy was only up 30 bucks. And it went down to 252. And then, you let Theta do its trick. If it goes up a little bit, it went down big. He's still down a good amount. And then we finally have one update, the first update in 9 days today. And Theta and everything just killed that option. So I actually tried to buy it back today. I tried to buy it back for $3.95. It hit $4.05 at one point today, but we didn't get it. So, tomorrow, if this option's flat, I'm going to get it probably, especially if we just let the whole day run out. And maybe it goes up 0.3%. We're going to get that, and we're going to be up over 50% and make good money on it. So how I decided to pick Alibaba for this play, and other people ask how do you, one of the comments in the video yesterday was what do you do to pick these stocks? So for instance, Alibaba is in a sector that I really like, which is e-commerce. I think e-commerce is a growing sector that will continue to grow and grow over the years, especially with lockdowns happening and, people transitioning more to online rather than going in person for stores. So I watched Alibaba and I watched the stock take an absolute hit from where it was in the low 300s to mid 200s, and I was like, okay. I read a couple articles about it. I looked at their, earnings. That's another good thing. Look at companies' earnings, see how they're doing. Look at their PE ratio. It's a good way to see. And there's also something right here. If you go to this part, if you're on Robinhood anyways, you can see, okay, that's weird. This chart called RSI. If you go to add data here, you have the moving averages, the RSI, and the MACD. I like to use the RSI to see at a part where it's oversold. Once it's oversold, that's when I like to do it. So today, the only real part it got oversold was in the morning. If you guys can see this RSI right over there, right here, it'll say the number. The lower it is, the more oversold it is. You see it gets all the way up here. It was a little overbought at that time. It cools down a little bit, and then as you can see at the end of the day, perfectly normal, right in the center. That's a perfect price for it. But if you see something like this and you want to get into a stock and you see RSI that low, that means it's oversold and it's a good time to get in. There's also another good thing called the MACD, which is more about like the moving averages and relative averages. And you can see when these two cross, when it's a good time, you see it drop super low. Okay, maybe it's a good time to get in right about here. It goes up. Okay, it's a little high for where it normally is over the averages. This is for more long-term MACD. RSI is for more short-term. So try to remember that, short-term, long-term. But that's a great way to find out when to jump into a trade. If you want to jump in soon on a trade, use RSI. You want to do more long-term, go MACD. So let's jump into another option that I've wrote right about here. Credit spreads. So credit spreads are essentially, I talked about it in the last video. If you guys want to see it, it's just the last video. Go click it and watch it. Credit spreads are somewhat risky, but I'm giving myself a lot of protection. As you guys can see, 2,800 strike price, 220. Alibaba's sitting at 260 right now, and Amazon's sitting at 3,100 right now. So we have over 300 points with this, and about 40 points with this. So very, very safe. And we get some premium for that as well. Like I said, I look at how much they're going for. I look at the theta. I look at all that stuff, and really decide if this is a good decision to jump into. I use a couple stocks that I do these on. You really get to know a couple stocks. I mean, you don't want to just do it on random stocks. I learned my lesson the hard way. You don't want to just jump into a random stock just because it's been down a lot and be like, okay, now I'm going to jump into it because it's down. Like, no, really know the stock, know the company, know what's coming. Catalysts are huge. Catalysts coming up will cause high IV. High IV means high premium. So IV is implied volatility. And if you go to any option at all, like if we go to this Alibaba put right here and we go down, the implied volatility 37%, that's not big at all. That's not much at all. If you go to a stock near earnings time, their implied volatility is going to be huge because they're implying a huge movement either up or down. So if you want and you're bullish on something, that's a good time to sell a put or sell a call to try to get a lot of premium out of it. You don't want to buy things when the IV is super high, because even if the stock goes up a little bit, if it doesn't go up enough, you're going to get something called IV crushed, where even if the stock goes up, it doesn't matter. The implied volatility, they were looking for much bigger of a jump. You end up getting, your calls or puts that you bought just get wiped out 50, 70, 90% in one day. And I've seen it happen. People buy in for earnings, and let's say earnings are decent and the stock goes up 2% or 3%, which is, hey, not bad. Your call's screwed though because of that. And a perfect example of this is NVIDIA. If we go to NVIDIA today, NVIDIA released earnings yesterday. So if we go over to, and they finished even for the day, but so even though they're even for the day, if we look at their options, they're going to be absolutely crushed today. November 27th, is that it? Okay, so I can't see this week's earnings because of Apple, or not Apple, my bad. Robinhood doesn't allow me to see it. But if you look at next week, even next week's earnings or calls destroyed. Over a third of the value just absolutely wiped out. And that's not even this week. This week is probably at least 95% done on these options. So you really got to be careful because you don't want to get IV crushed. So that's another good thing to watch for when you jump into an options position. But that's just a couple of things. That's what I do. I pick a couple companies and I try to do it as safe as I possibly can. And I try to make sure I make some sort of money every single week. So like I said, we got the $39 from this. That's going to be locked up. We're going to be good on that. And then I have this BABA put. That's a 2-week out one. The longer out you go, more time, more money you get up front, which is pretty nice. So it's a little more risky because you won't be able to do a lot of plays, and things can happen in that amount of time. But you're going to get a lot more money, and you're going to have more time on your side as well in case something bad happens initially and then it goes back up. So, it can work in your favor, it can work not in your favor. It all depends. But overall, it's a very good strategy to do. When you're selling puts, you're selling calls, look at these things. Look at the Greeks. And that's what I was saying about the theta, the implied volatility, the delta, all that stuff. And, calculate it. And you can also use this thing, what I like to use, called the options calculator. Right here, options calculator. You can really check, and you can go in here, you can put in the symbol. So you put in BABA. It'll tell you the price. You can select the option that you wrote, all that different stuff like that, calls, puts, all that good stuff. And it'll give you a nice little chart that you can see, how much it's going to cost to. So this is a spread. So if we go over here, I'll just click a random one. Sorry, guys. I was not expecting this. Just click this, calculate, and it'll basically show you like, okay, if it goes up to this much, you'll make this much. If it goes down here, you'll lose this much on a certain day, a certain expiration. So, it's something to look at. Entry costs this much. Debit, your maximum return on it is that much. So, you'll see these things. Use this website. It helps out a lot. But those are just basically what I do when I make options trades, and you guys can do whatever you want. But that's just what I do, and I hope it helps out. Hope you guys get a little sense of, how like an active trader can use these tools to really help maximize his profits and his safety. So, guys, if you enjoyed the video, like I said, like and subscribe. Hope you guys are doing great today, and I will catch you guys in the next video. Take it easy, guys. Bye.